Hi everybody and welcome to our London session update on Tuesday the 16th of April 2013. Well, we've seen a bit more stabilisation in the markets today. Even though European stocks are off, we've really seen stabilisation, particularly in the commodity sphere with gold, of course, massive mover yesterday, but also in some of the FX crosses. Now, it's still on everyone's mind. Why on earth did gold fall so sharply yesterday and Friday? Why is it down below, nearly at its lows for 2 years? Let's take a look at that daily chart. As you can see, we did find some very good support at 13.22. That was the low from yesterday, but those precipitous declines, they did cause a hike in margin requirements. So we saw the CME raise margin requirements, not just for gold, but for silver, for platinum. One thing to remember is the whole commodity complex has got hit here. We are seeing a bit of a recovery today, obviously in gold leading with, but also in the Aussie, the Kiwi and the CAD, so the commodity end of the FX spectrum. What does this actually mean, and why did it happen, and why did it happen with such aggressiveness as it did yesterday? Well, we do tend to think it's probably the start of a downtrend, or certainly another stage lower in gold prices, even though we do expect some consolidation. It's growth fears in China, it's the prospect that there's no real, what commodities are telling us right now is that there's no threat of inflation at the moment. And then we're also getting, just overall position squaring. We do think it was a bit of a squeeze, and that's why we saw the euro sell off, the pound sell off. That's ultimately a healthy thing, but I think for gold it's going to be very hard to go back to those highs above 1500, above those 1525. They were at one point the lows of the last 12 months, and now it's massive resistance. We have been clawing back some losses today. 1380 though is really thwarting the bulls. There is some other incremental support though, 1425 and 1450. 1320, if you look at the candlestick, there was a long lower shadow, and that does tend to give a warning bell that the bulls did try to push it down there, but it didn't last. We did see buyers come in. So what does that mean for the trader? When the price is right, buyers will come in, and that's what we're seeing elsewhere. Let's take a look as well at dollar yen. Dollar yen's going to come into focus today because we have US CPI coming out later, along with some housing market data. If we see, if we continue to see some weakening in US economic data, maybe some weak CPI later today, then we could see further downward pressure on dollar yen. But right now, we do think downside is probably limited in terms of, from a technical perspective, buyers are coming in at 97.20. We also did get below 96 at one point yesterday, but the market didn't like it, pushed it right back. We do know that we're hearing rumours that there's a lot of interest around about that 97.20 level, so getting above that 97 level is considered a massive threshold that could see us to 100 and even beyond. So we still think 100 is definitely on the cards, or perfectly acceptable to be on the cards. It just may take a little bit longer to get there. But overall today, economic data back in focus. We had that UK CPI earlier and the disappointing ZEW, but the market is tending to it's in recovery mode. It's willing to brush off some weakness in the economic data and just recover after yesterday's enormous moves. So please do have good luck trading today, and do join us tomorrow for more. Thank you.